President Trump is now trying to abolish the Internal Revenue Service, IRS. More than 6,000 IRS employees have just been fired at the time that we are going through the IRS's busy season. But at the same time, we're now hearing that the Department of Government Efficiency, DOGE, could potentially issue a refund check of maybe $55,000 to more than 7 to 9 million American households. And all this is happening as President Trump is just 1 month into his presidency. I'm going to break down what's going on exactly and what this could mean for you and I moving forward. But why this is such big news at this time. When President Donald Trump went on the Joe Rogan podcast last fall, he said some remarkable things. And one of the most remarkable things he said was that the IRS was a stupid idea and the idea of enemies of the United States of America.
You just float out the idea of getting rid of income taxes and replacing it with tariffs?
Well, okay.
Were you serious about that?
Yeah, sure, but why not?
President Trump is currently considering the possibility of eliminating the income tax. Take a listen to what he had to say.
Instead of taxing our citizens to enrich foreign nations, we should be tariffing and taxing foreign nations to enrich our citizens.
At first, I thought this idea might be a joke, but Congress is actually taking it seriously. A bill called the Fair Tax Act of 2025 has been proposed, which would essentially dismantle the IRS. If you're skeptical, let me read you a sentence from the bill's press release. It says the fair tax would also eliminate the need for the Internal Revenue Service. Now, you might be wondering, if the government removes income tax, where will it get its revenue? This could explain why Trump has also been working to establish the External Revenue Service, a new entity designed to collect tariffs. That's why in this video I want to discuss taxes not from a political angle but from a financial perspective. To break it all down, I'll be covering 3 key points. 1. Understanding how our tax system currently operates so we can see how tariffs would fit into it. 2. Exploring the feasibility of replacing income tax with tariffs, how it would work and whether it's possible. 3. Examining the potential consequences. Would this worsen inflation, or could it have a different effect? I encourage you to stick with me until the end, because I think this will help you see the big picture more clearly. Here's a simple explanation illustrating our tax system. When you pay taxes to the government through the different channels of taxation, and once the government collects tax revenue, it spends all that money immediately. Now you might assume that if the government collects $100 in taxes, it can only spend $80, or maybe at most $100. However, that's not the case. If the government wants to spend more than it has, something it does regularly, it borrows money, which is why we're seeing a record high national debt today. So, you pay taxes, the government spends all of that revenue, and then some, by borrowing. So, what exactly are you paying taxes on? You might be wondering as to what exactly are you paying taxes on. Here's a rough list of 10 different buckets of taxes that you might be paying. 1. Income taxes. When you work and earn money, the government takes a portion of it. 2. Payroll taxes. In addition to income taxes, you also pay FICA taxes, which are for Social Security and Medicare, and both you and your employer contribute to these. If you're self-employed, you pay both portions. 3. Capital gains taxes. If you buy and sell assets like stocks for a profit, you pay taxes on those gains. 4. Corporate taxes. Businesses, particularly C corporations, must pay taxes on their profits, separate from the taxes individuals pay on their earnings. 5. Property taxes. Homeowners pay annual taxes on their property. 6. Estate taxes, also known as the death tax. If you pass down wealth to your children, estate taxes apply, though only for inheritances exceeding $13.99 million as of 2025. 7. Sales taxes. Every time you buy goods, you pay sales tax. 8. Sin taxes. These are taxes on products like cigarettes and lotteries that the government wants to discourage. 9. Tariffs. Taxes on imported goods, which we'll discuss further. 10. Miscellaneous taxes. This category includes tolls, hotel taxes, and other various taxes. What Trump is proposing appears to be eliminating income tax and replacing it with increased tariffs on goods from other countries. Now that we understand how our tax system works, where the government collects revenue and how it spends beyond its means, let's examine whether tariffs could realistically replace income tax. In 2024, the IRS collected approximately $5.1 trillion in income taxes. After issuing tax refunds and credits, the government effectively retained around $4.5 trillion. So, if we were to eliminate income tax, we would need to generate an additional $4.5 trillion through tariffs. Based on U.S. Customs and Border Protection data, in 2022, the United States imported about $3.35 trillion worth of goods and collected around $11 billion in tariffs. Doing the math, to generate $4.5 trillion in tariff revenue, the government would need to impose a tariff rate of approximately 130% on all imports, a figure that seems highly impractical. Additionally, tariffs are intended to encourage domestic manufacturing. If businesses move production back to the United States, imports decrease, and consequently, tariff revenue also declines. Given these figures, fully replacing income tax with tariffs seems unlikely unless government spending is significantly reduced. There's also the question of inflation. Would tariffs drive up prices? If a shoe costs $50 to produce overseas and a 20% tariff is added, the cost rises to $60. Businesses can either absorb this cost or pass it on to consumers, potentially raising prices. However, some studies, like one from the Economic Policy Institute, argue that tariffs on steel imposed in 2018 did not lead to higher steel prices. This uncertainty makes it difficult to predict the actual impact of tariffs on inflation. Ultimately, Trump has suggested that tariffs could lead to tax savings for Americans, effectively shifting to a consumption-based tax system. If tariffs increase, those who consume more imported goods will feel the impact more. However, the extent of tariffs, which countries they would target, and their effect on income taxes remain unclear. At the end of the day, what matters most is financial literacy. Regardless of political decisions, understanding money and the economy is essential. Instead of getting caught up in political debates, focus on managing your finances. Spend wisely, save, and invest. If you have credit card debt, prioritize paying it off. If you lack emergency savings, work on building that first. Once your financial foundation is strong, look into investments like the S&P 500, individual stocks, rental properties, or businesses. Remember, it's your responsibility to secure your financial future. No one in the White House is going to do it for you. Stay informed, stay prepared, and take control of your financial well-being. But if you're serious about staying ahead of the economic shifts in 2025 and uncovering investment opportunities before the masses, make sure to check out my next video, which explains the investment opportunities of the Trump administration in 2025 and beyond. In it, I break down the most overlooked strategies that can help you navigate major financial changes. Click here to watch now, and don't forget to subscribe for more insights on the economy, markets, and smart investing. Thanks for watching, and please do well to subscribe.